Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
All right, inside of Advanced Get, we've got 5 trading strategies. Now, these 5 strategies can all, at the end of the day, be used trading options. But like I said, over the course of the last few years, over the course of my tenure at Advanced Get since '97, and talking to all kinds of different options traders, whether they're equities, currencies, all the options traders, the Type 1 and the Type 2 trade really reign as the more popular strategies. And it's for a couple reasons. In the Elliott perspective, the Type 1 and Type 2 are the most accurate. As a technical analyst, what you want out of your trading system is A, accuracy. 2, or B, you want reward risk. Those 2 trades offer the highest of both. They're going to be able to give you a good profit target using a sound exit strategy with good time and price targets, and they also have the accuracy of the Elliott wave behind it. So today's presentation, I'm going to focus on the Type 1 and the Type 2 trades, 2 of our favorite for the option strategies. In addition, just to give you kind of a glimpse of everything that Advanced Get can do, if that wave 3 looks very interesting to you, that nice big long trend of the market, we can trade that using the XTL trade. We have an XTL breakout trade that's designed to try to catch the beginning of your Elliott wave 3. Now, the disadvantages to your XTL breakout trade, first and foremost, is accuracy. Now, the beauty of trading options is you can buy into these higher risk trades with less risk on a monetary front because you're only risking premium. So you do have an advantage of that with trading the XTL breakout trades. Now, the disadvantage of the XTL breakout trades is quite often you won't have a sense of time. You'll buy into what we think is the major trend starting point. We may have a price objective based on Fibonacci to where that trend is going to start filtering down, but very rarely can we find a time element. So that's a disadvantage from the options front. The XTL continuation trade is one of those trades that come in during the wave 3. It's a great trading strategy. On the options front, it's not bad, but it's going to be what we would refer to as a swing trade. If you bought into what we think is an XTL continuation on a daily chart, the trade may only last 3 to 5 days. Very short time frame. But we will give you a time projection for that trade as well. The beauty, the best trades in the system for options, the Elliott Type 1 and the Elliott Type 2. Now, on average, now this is just an average, this isn't all the time, on average, the Elliott Type 1 trade and the Elliott Type 2 trade take anywhere from 18 to 30 bars to complete. That means if you're trading a currency on a daily chart, your trade would last anywhere from 3 to 5 weeks. If you're trading on a smaller time frame, take your time frame, multiply it by 18 to 35, and that would be your projected time. Now, in the software, and I'll show you this here in a few minutes, you're actually going to get a specific time to look for profits. The Elliott Type 2 trade, same basic fact, 18 to 30 bars on a daily chart, 3 to 5 weeks. If you're trading on a weekly time frame, a little bit longer, 18 to 35 weeks. If you're trading on a 16-minute chart or a 60-minute chart, 18 to 35 hours. So you pick the time frame that really designates how long you want to be involved in the trade. The strategies work on anything, 1-minute charts, 5-minute charts, dailies, weeklies, etc. Now, once you pick your trading strategy, whether it's a Type 1 trade, a Type 2 trade, once you pick the strategy, you have to have in mind a trading plan, some sort of a mechanical plan that takes you from the start, finding the actual trade, all the way to managing the money when you're going to cash out the position. The strategy that we teach or that we promote is based off of the name Advanced Get, and we call it the Get-M strategy. First and foremost, get the trade. How do we actually find where these trades are coming in? Whether they're the type 1 trades, the type 2 trades, XTL, whatever strategy you're employing. First is get the trade. And I'll give you kind of a tale of two trades or two traders. First, I'm going to talk about myself. I'm a professional trader. I work for eSignal. I do presentations a couple hours a week, but in the off time, I am a trader. I day trade equity markets, equity futures, and I also position and swing trade currency markets. I sit in front of my screen for 8 to 10 hours a day. This is my profession. It's what I do. I find trades typically by just watching markets. I'll go in the morning. I'll put up 3 or 4 charts of my day trades. When the evening comes, I'll put up 3 or 4 charts of the currencies I want to monitor, and I'm just going to watch the charts looking for trades to show up. If you're going to be a little bit more conservative in your approach, we have filters such as the dashboard, and I'll show you that here in a few minutes, that you can put on your screen. It'll monitor 10, 15, 20, 30 charts for you, maybe all the currency pairs, and it's going to point out, hey, on a daily chart of the euro, you've got a potential type 1 trade. On a 60-minute chart of the Swiss, you've got a type 2. It'll help you find the trades. So all you need to do is look at your screen for just a few minutes, and it's going to find the trades for you. If there's no trades present, you did a quick check, go back to whatever it is you're doing. Once you find the trade, then comes the important part, the examination. What does the chart look like? Is it following the rules of my trading strategy? Now, as I mentioned in the beginning, Advanced Get is a mechanical system. That means we have hard, fast rules that must be followed to take the trade. And I'll share those with you this evening. If the examination is good, all of the rules to the trading system have been met, we go on to the third part, trigger the trade. Now, even with options, we want to look for a proper trigger. We want to make sure the underlying chart pattern is starting to move in our direction. And I'll show you how we do that using a regression trend channel. Even in the options markets, again, it's important to confirm that the market is moving in our direction. Yes, I know that you're still looking for strike and you're still buying premium, but it's still important that the pattern is going in your direction. The last step, the money management. Where do we take profits on the position? Where can we, in some cases, adjust our position if we're taking multiple contracts to lock in profits? The money management phase, if you've been trading, I don't have to tell you, is probably the most important aspect of trading. So we're going to walk through this in our 4-step pattern.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.